So I want to talk about, of course, the grain markets, but we'll start out talking about some trade issues. Oh yeah, that'd be good.
Oh, sorry.
There we go. You're balancing volume and echo in this room. It's somewhere between the two. So anyway, thank you. So we're going to talk about grain markets, foreign trade, and policy. We'll talk about the trade and policy first, and then that'll bleed over into the grain markets. So talked about this this first topic at the Cover Your Acres conference, but so some of the information is the same, but there's been some updates as things have transpired. That was prior to on February 1st when we had that, so we'll see how that's come about. So what impact could trade actions by President Trump have on U.S. grain exports? The fear all along has been that once tariffs were announced, that there'd be retaliatory actions, and that would work to the disadvantage of grain markets. And when you listen to people commenting on that are in that, there's still the general idea that somewhere out there that retaliatory tariffs, particularly from China, would and maybe Mexico would and end up and hurt U.S. ag income in a major way. And of course, we're looking at the potential for farm machinery and other costs to go higher. And note that the U.S. has announced here just recently 25% import tariffs on steel and aluminum coming in. And so I'm reading that I understand that, well, one of the main countries, that the third largest country that sends steel and aluminum into the U.S. is Brazil. So you're starting to get at issues, again, commodity by commodity of contention. Grain export sales, so farm machinery and other costs probably go higher because of that. If there's not a reconciliation of some type. Grain export sales, there's a fear that U.S. export sales would go lower. That was particularly the case before with Mexico, before there was this 1 month reprieve and actions to remediate all that. And it just adds in general to market instability and uncertainty. So the last time we talked about this was that I think Cover Your Acres was literally the day after, the day of or after, up in Oberlin of the inauguration. The day after the inauguration, grain futures went up strong to the high side. There was fear that immediately after the inauguration there'd be a announcement of strong high tariffs on everybody, and that didn't come about. So that the markets jumped. So what does that say? That says that the psychology of the markets was overly bearish. It was overly bearish. It was out of fear. And so so after that, moved to the higher side. Other factors contributed to that. So the U.S. came out about February 1st then and had stated intentions to place 25% tariffs on imported goods from Canada and Mexico. And so then immediately the representatives of those countries talked with one another and delayed that for at least 1 month. Mexico, well, the issue with Mexico seems to be not so much the goods that they're sending. It had to do more with border enforcement and drug import, fentanyl, illegal drugs. So Mexico sent troops to the border and got a 1 month reprieve. So I guess you began a process of negotiation. There was also a 1 month reprieve for Canada, and stated issues there also had to do with immigration, not as much immigration, but drug imports. And you hear discussions about the type of businesses that U.S. businesses that are allowed into there. I hear a lot of discussion about the banking sector, and whatever else. So if working with Kansas State, and Glenn will say this, we have to walk right down the middle of the road. You know, we can't make political statements. If the intent of the incoming administration was to get people's attention, they got their attention. You know, that's just a lot of things underway. Other considerations, again, this is well known. Tariffs are part of a broader strategy to address what the current administration sees as global trade imbalances, particularly with China, which has long been a major trading partner with U.S. grain exports, and especially soybeans consistently, periodically, corn, wheat, and has been, still is, the #1 importer of sorghum. But in the last up until last week, you were just flatlining on U.S. grain sorghum exports, just flatlining. Here's last week, we had a decent week as sorghum goes. So maybe that's loosening up. And in that last trade row between the U.S. and China, there was acknowledgement of significant damage to U.S. farm income. And so billions of dollars came out to the ag sector overall. U.S. government paid farmers $23.2 billion due to trade war losses, and 18 through 23 through the market facilitation program. I had to quick go and brush off my acronyms, you know, what this stuff means. And non-specialty crops, i.e. soybeans, corn, wheat, got by far the lion's share of that 23.2 billion, just under 22. And we learned what tranches stand for. I never heard of that word before. That they're basically just different payments. 1%, the first covered about 50% of the estimated payment, about $15 an acre. So if that held true reasoning-wise, about $30 an acre. And you remember, you probably just like me, you remember the day when that came out, and the details were all in which crops are they talking about, which acres are they gonna set a payment for, et cetera. So that we haven't got to that place yet, but that's the well-established path. That if we end up with problems, that could come about. We'll see. There was a study, a potential new how potential new tariffs could impact U.S. soybeans and corn. This sponsored by the corn growers and the Soybean Association together, National Corn Growers, ASA, American Soybean Association. And I know it's hard to believe that out in farm country that we have a hard time knowing exactly what the truth is. that there are rumors out there and people get all shook up about things. So I was surprised that a lot of the discussion that was initially talked about was that, man, we're going to get that China charges the U.S. 65% import tariffs. Well, that's the reality of how that has been playing out was that China was granted most favored nation status for beans, 3% import tariff, soybean meal 5%, for corn 1%, up to this minimum amount. Now, if you remember, you have to brush off the term TRQs, trade rated quota, corn tariff rate quota, up to 7.2 million metric tons. They charge 1%. If they bring in any more corn than that, then they can go to the 65. So I didn't understand that right. It's not 65% on everything. It's the smaller amount. Well, as that trade war went along, you had the first round of tariffs where they went from 3 to 20. Say for corn, let's go with corn. It was at 1%, then they went to 25%, and added another round of retaliatory tariffs. Added another shot, another 5% for soybeans. And there was a reduction, 2.5%. So you ended up with total tariff that could be applied that China could charge, that they have on the books. They could go back and charge 30.5% for soybeans, 30% for meal, basically crude soybean oil, other soybean oil, 34% for corn, 26%. And if you get over the quota, then it goes to 90%. But what they have been charging is more like this: 3%, 5%, 9%, 1%. So when the U.S. came out here, again, I'm just like you. I'm reading news articles, there aren't official announcements on it. Reading news articles that the Trump administration had come out and said, basically it stated that they were going to charge 10%. That's the last number I'd heard. China came back and indicated on certain goods, I think it was liquid natural gas and something else. I can't remember off the top of my head, that they were going to institute 10%. They're already regularly charging these amounts: 3%, 5%, well, 3% for soybeans, 1% for corn until the TRQ. So that's kind of where we're at, and it's going back and forth, etc. The most noticeable commodity for us in Kansas is sorghum. It's not that they've upped their tariff, they just haven't been buying any. You know, part of this also is that there's a couple major countries in the world that grow grain sorghum and send it to China, the United States being one, Australia being the other. Australia's had a pretty good crop. So they don't have to come to the U.S. this year for that. And so far, until last week anyway, they weren't. Still, if you go back, you dig into the numbers of what we have sold for grain sorghum exports out of the U.S., and that's in our neighborhood where that comes from, a lot of it. Still, China has bought about 85 to 90% of it. It's just that they're not buying as much. So it's a deal with sorghum. And in the interest of time, won't go through all the details of it, but in so many words, you're looking at if we change that, solid line, if China removes existing waivers on soybeans and corn, basically if they go back to start charging this, then it's about, on average, about for beans, it's about 60 cents on average over time. If they implement, if it really get angry with one another and we start trading 60% tariff shots up and down, then soybeans get strong hit, about a 90 cents to $1. We don't grow that many soybeans here. For corn, it'd be 8 or 9 cents. An estimate in the whole world picture, it would hurt the corn market some, to make it softer, not destroy it, but make it softer. And that's it. If they go back with 26% tariff for corn from China, and if they go at 60% tariff and just fight it out, then it's more like 10, 15, 20. And the reason it's not more for corn is because there's a lot of other countries that buy corn. We have pretty strong domestic demand. Ethanol is pretty good, etc. So they're a part of what happens for corn, but it's not predominant. For soybeans, it's predominant. You know, they're the big buyer. So and other new ag energy environmental policies, expansion of U.S. domestic energy production. To throw this all up, really all this, anything having to do with it, and Glenn, this isn't a bias, it's just an opinion, that we're talking ag, energy, and environment, there should be a plus there. Because anything we're talking about energy, the environmental concerns have to do with the energy sector. They're hooked together. So, and this is all up in the air right now. There were rules that were going to come in for ethanol plants, and I think they're delayed. The intent was to give financial rewards to farmers that would produce crops in what the USDA or EPA thought was an environmentally friendly manner. So they're going to pay you for that. Carrot and stick. You know, so if they encouraged you to do something, to produce something by what somebody deemed to be environmentally friendly process, then you would change. You'd follow that guide. They'd pay you for it. They were seeking to, and I hope I'm objective. They're seeking to change production practices out in the country through subsidies for anything sold to ethanol plants. So anyway, so that's all up in the air. Let's take a look. Now I know that Kyle follows me at 10:15, and Kyle, I have promised that I won't eat your time up, okay? I'll try not to. There we go. Let's hit the high points for feed grains. Current situation for corn is actually been growing more positive over the last 3 or 4 months. Low corn prices have helped to spur usage. Ethanol usage has been pretty good. Feed usage out of that last quarterly report looking decent. Exports had been doing okay. So you're getting at apparently there's a big difference between U.S. corn index stocks at about 2 billion bushels and U.S. corn index stocks at about 1.5. You're tightening up stocks to use to get there. So the corn market is actually pretty tight, or tightening up. And when you look back historically, when we had $6 corn, 5+, we had stocks to use. Well, we had ending stocks were 1.2, 1.3 billion bushels. So that we've been tightening over the last 4 months. We tightened up U.S. ending stocks about 4 to 500 million bushels. So market has to worry about it now. There's not as much carryover. It matters what happens weather-wise in the U.S. So that's a positive. And so the corn market, with this tightening of stocks, will be a lot more reactive in the spring and early summer. So that's something to remember. I know what we've got now. It's tightened things up a little bit, but it's heightened the risk out there in the spring. So that might help you in terms of old crop, any leftover old crop, and any potential new crop sales. So that's a positive. And emerging crop risk has been dry in Argentina. Has some lots of moisture in Brazil has it slowed down soybean harvest, had been, and then also delayed second crop planting. So that pushing that crop out into the drier window may impact 2025 Brazil, Argentina crops and exports. So that's a positive. Lagging U.S. grain exports, mainly to China. We've talked about that. Trade policy and tariffs, it's up in the air. If you had a scale of whether the grain market is optimistic or pessimistic, when you ask them in the morning, are you an optimist or a pessimist? Oh, I'm a pessimist. What happened overnight? We're worried about these trade issues, and our first impulse anymore of late has been to be negative. And I think that's still there. Weak corn sorghum basis in parts of Kansas since fall, and we finished up weak for corn and sorghum basis in almost all of western Kansas at the end of the calendar year, and have just continued it, and if anything have weakened a little bit. You really see it down in Garden City where 45, 60 cents over normal basis of late. They had been about 10 over. So weak basis down in Garden City, and that just comes up to us. I would say that our sorghum basis here, we try to watch that on a weekly basis. Our sorghum basis has been, for new crop bids, has been better up here than it has in Garden City. So that's a positive. Why? Again, so what's the outlook for feed grain basis spring, summer? I guess for sorghum, it'd be nice if the Chinese re-entered the market. That'd be really good, because then you got exports driving that. Otherwise, sorghum just competes with corn. And there's some margin of differential there. So I say that there's probably 3 members of the Kansas Grain Sorghum Commission sitting out in this audience. I'm probably going to get chewed on. So I don't mean that. I don't mean anything negative there. But when sorghum has that differentiated demand to China in particular, that corn doesn't, then it stands out. When it doesn't, it still competes, but it's just competing for value of use. It's just value of use. And generally the thoughts are, particularly what's happened of late, higher corn plantings this spring in the U.S. overall. Ethanol regulatory policy trade issues, we already talked about that. It's basically up in the air now. And for us, I see some people I know, I even see a neighbor or two of mine be out in the field quite a bit here of late, coming in. So you really wonder what's going to happen in the spring. It's going to be wet, going to be dry. Not so much even here, but what's it going to be over in the Central Corn Belt? Are they going to be delayed or not? And all that comes into that spring seasonality, and we'll see where we go from there. So I'm going to move real quickly on some things. This presentation is on our Ag Manager website, www.agmanager.info. So you can get all that. We figured out that we could print out 45 pages of stuff, and everybody will say, "Oh, that looks pretty good." And then we're helping the economy, by selling paper. But I'm not sure what the time usage of that is later. But if you want any of this stuff, we've got it up right now online on our K-State website, the whole thing. So corn futures closes just quickly. Friday, it was up about 3 cents. Was that last look here a few minutes ago? 487.5. This had gotten up to around 5 for the lead. New crop 466. It was again 15, 20 cents higher. That was down some on Friday. And so for those of you watching the corn market, so this is what's happened. We've gained some. This is back in the low actually was back here in August, late August, early September, in kind of a tortured manner, moved to the high side, jumped up to just under $5, and are just kind of hanging around waiting for something else to happen. And historically, is this good or bad? Well, I'm going to make a statement that you don't have to agree with. And that's it. We've had times of tremendous corn prices above $5. We've got this Ukraine-Russia war, the drought of 2012, pretty tight conditions heading into that, which made this all that much more reactive. Financial issues back in 2007, 2008, and tight stocks. So those have been tremendous times. But most of the time in the corn market, when you look at 487, we've spent below where we're at right now. We've got to this area, and we had to have a crisis. You had to have a drought. You had to have a trade war, or you had to have a real war to take it sky high. So it's my own thought. We're sitting at an area where our memory is this. Our intermediate term memory, our long term memory is that even now we're above $4, we're above $4.50, we're actually above $4.75, so we're not sitting at too bad of a place historically for prices. And we're coming into spring, we'll see what happens. Colby area, Friday's close, 467 corn, 463 new crop. You can see the basis bid. Really, that's a pretty decent basis bid. Now, that for corn, and 476 Garden City. We're the second highest new crop bid in the state. Well, we're in western Kansas. We've got livestock feeders around. We had gotten this ratio of corn to wheat on the cash market had gotten to the place where we're sitting right on neutral now in terms of where you'd start to feed wheat at. In the last month, that we've had wheat prices below corn prices until wheat started to come up, and a lot of interest in livestock feeding of wheat. And so Glenn, Kyle, with your economic background, so if anything's profitable in Kansas, what do? Well, we kill it, basically, because then people start buying wheat, and we start to drive wheat up. So right now we're back to about neutral. And there's the basis, Cornerstone Ag. In essence, 2024 ended up here, and again, then that's about 10-15 under. And took that right over here, started right there again, and it went there and weakened a little bit. And sorghum prices, 428, Colby area, Garden City, 417. So we've actually got a little stronger sorghum price here a little better basis. New crop bids, 403. Now they have on Friday they had better new crop bid in the Garden City area, 35 under than we have here, but the cash price is a little better. And you can see the same story on the sorghum basis, weakening here of late. Okay, for wheat, you read a market commentary this morning, and it's true that in terms of just straight price action, the wheat market's probably been as strong as anything of late. A gentleman from Grinnell and I were talking. He asked me the question. I just run in fear for it. But he asked me, so should I sell my wheat or not? And so normally asking the ag economist that question, they talk for 15 minutes, they give you 3 answers, and I think they call that a filibuster, you know. So something like that. But I think the big issue of the wheat market has to do with, just like we talked about, it's an overseas export competitor issue. Russia has been dominating that market, selling so much that they're seeing the need to cut back here in not too long to have adequate domestic supplies. So that's, you see the announcements that in some scheduled meeting down the road they're going to do that. So that really is probably the thing we're waiting for. Because you have Russia better positioned to sell to Morocco and Egypt and those places that need to buy this a lot, and we have a pretty high value of the U.S. dollar. Russia's currency isn't much. Weak dollar, so it's better positioned, lower currency exchange rate, and as long as they're in the market, they push us later in preference, except for countries that are close to us. So, and ending stocks, really just so-so, about 800 million bushels in stock. Stocks use about 40%. The wheat market overall is oversupplied until that export thing might come. And we'll see what happens in the spring. I was asking you, sir, about, so what's your wheat look like? He said, I know what it looks like along I-70, but what's the rest of it? He said, well, there's a lot more going on than right around I-70. So we'll see where we're at in the spring. Right now, it doesn't seem like it's terrible, but we'll see. Drought risks, Ukraine-Russia may impact Black Sea wheat crops and exports. That'd be positive for us. And honestly, we're lagging to all major buyers. We're lagging in sales to all major, I should put classes there, especially for U.S. hard red. Hard red's been suffering. You try to watch this on a weekly basis, and we'll be bouncing along and not much happening, and suddenly a tremendous week. Then we go back to hardly anything. So we've had some price-sensitive buyers out there. U.S. trade tariffs policy may impact wheat markets, but question mark. We don't know how it's going to play out. Weak basis since fall, primarily caused by our poor exports for what we grow here, due to high value of the dollar, aggressive export sales by Russia and Ukraine. And these two countries, they're in a war. So how do they generate money? Well, they have crops, and they sell them, and so they're trying to generate cash, and they don't have much for storage. Plus, they've been shooting at each other's storage. So when they produce a crop, they don't generally keep it around. They send it out to generate cash. So we're here in the U.S. We have tremendous grain elevators. We have a transportation system. We have a financial system where we can actually fund in an orderly manner, borrowing money to hold inventories. And these other places, they don't necessarily have that. Their financial systems may be pretty corrupt, actually. So it puts and keep in condition. So we'll be watching the spring out here, April, May, ahead of the 25 harvest. And just quickly, hey, we're just happy that there's a 6 there in front of some of these prices. We have been with 5s of late. And so again, and that's not joking. 550 here of late. Look at the March contract. We've climbed up to where we actually are over 6. Of late on this contract to get up to about 635, 640 that's the highest we've been other than way back in last April. Is this a good price or not? It's more of a middling deal than it was for corn. So 604 came through time frame when we were at just below $4. Traded and here ran through 5 for quite a bit of time. At the tops, we'd reach 604. Came here this fall, got down to 527 after these tremendous highs. That was the Ukraine-Russia war. The world was thinking, hey, we're not going to have enough wheat to make bread. And they were panicking. So we came off of that, are sitting here now at 604. And the challenge with wheat on our crop production budgets, is that we have any wheat production systems that have a fallow period in it, 2 crops in 3 years or 3 crops in 4, then we've got 1 year there that we're not producing crop income off of it. So we get a lot of economic pressure to say, man, can I knock that fallow period out? So getting something every year in there rather than having to subsidize those acres. So our cost of production with fallow periods in it, cash it's 650 plus, unless we have tremendous yields. So that's our challenge right now, where we're sitting at. We've got fallow periods to typically digest. It just makes wheat tough to grow, and because of that, we've seen Kansas wheat acres just decline. We still need wheat for sure. Now I'm sure we have somebody from the Kansas wheat growers that's in the group, and I'll answer for that one. But honestly, I think that's an issue. How do we cover the costs in this thing? And cash bids, 529, Colby, Friday, 7,500 basis, 538 new crop. Garden City, a little bit better on those. And again, sitting right on neutral as we pointed out before in terms of the wheat versus corn prices. Around the state, in the export areas, 584 at Hutchinson, 585. So even where if we're going to export anything, where it's going to come from, it's still under 6. Just a challenge. Basis, really not too bad, kept kind of hanging in there. Finished up last year at about 75 under, 75.80, and have been there a little stronger. Do any of you grow soybeans? Okay, good. We grow soybeans under irrigation really pretty well out here. We just avoid hailstorms, Of course, that's for every crop out in there where we're at. But for soybeans, moderate stocks, 380 million bushels. When we had beans in the teens, we had 100 to 125 million bushels. Stocks to use at 2 or 3 or 4%. So we're sitting now at a moderate level, terribly oversupplied levels like 700-800 in this balance sheet. And stocks to use about 8.7 to get over 10 or so. That's pretty rough. Soybean market is not tight, but still have risk of U.S. and South American crop issues. Virgin crop risk down there. We just have to play it. When do we actually start to see something happen? If there's a challenge in, say, Brazil, well, it's not happening yet, but that's in the next 60 to 90 days. That's when their crop development's happening. We have had strong U.S. exports to date. With all my moaning and complaining, really we had pretty good exports, mainly to China. But when those South American beans start to come, then that's probably going to decline. They have a political preference to go. Excuse me, did I say that? I said it's supposed to be non. They for whatever reason they have a preference to go buy from Brazil and Argentina. Trade tariffs policy may impact soybeans. this is really probably the biggest fear in ag, that in the ag sector, is that China, with its predominant leadership position of buying U.S. soybeans, if they would vacate the premises. And so if they go full board to South America, then other buyers come back to the U.S. The thing with China, though, they tend to buy and try to build stocks up. And in the last trade war, on that trade, as they looked at it, we were down about 30%. It wasn't a one-for-one trade. We were slower. More soybean market issues. Okay, strong exports, U.S. soybean oil, and moderately strong meal. If anything, it's a fair question. As gangbusters as these markets are doing, why aren't soybeans higher? Because we have tremendous soybean oil demand and exports. Soybean meal also, and so that leads to pretty strong crush. But why aren't we seeing higher bean prices? Because we're seeing awfully strong movement in these. Some of it's due to lower prices, but lower prices tend to cure low prices. Mostly weak soybean basis since fall of last year. Unchanged lower soybean plantings. If corn goes up, the Central Corn Belt, it's probably going to be at beans expense. And biodiesel regulatory policy trade issues likely to be impacted by the Trump administration. We'll see. We were developing renewable diesel to sell to the West Coast and other places, the West Coast largely. So now what's going to happen with all the regulatory incentives that were out there for that 45Z first thing, that regulation. Watching for market seasonality out in the spring. I have 1 minute, or Kyle, Kyle, why don't you come on up? I'll take questions, because I think you're up in 1 minute. So just about. But at least you could transition over. Do you guys have any questions I can try to answer while we're moving Kyle in? I note that my good friend Mark Wood is not here, and it's not that Mark would say inflammatory things. I'm not saying that, but he'd have lots of opinions, and so it's a notably quiet set of.
So can the soybean crush plants that are supposedly coming online, will that be as big of an impact to the soybean market as ethanol?
Generally not. The EPA came out there's a story behind that. The EPA came out last year and talked about what they were wanting to require for renewable diesel. And that industry was really disappointed that they didn't take a stronger stance. They were just about neutral. So it seems to have slowed down some of that. Although, got a new plant that came in Cherryvale, southeast Kansas, and suddenly that's the strongest soybean market in the state, and it wasn't before. So plants make a difference, but it seems to have kind of preempted the gangbusters development.